Good afternoon. Thanks for tuning in. You're watching us BQ on BloombergQuint Live. I'm Navneet Saluja D'Souza.
Good afternoon, Navneet. I'm Agam Vakil. If you got questions on equity, this is the perfect show for you. Send your questions to us on Twitter, Facebook, YouTube, and WhatsApp. You can also call us on 022454044141. And of course, also mail us on usbq@bloombergquint.com. Just make sure you do add the UsBQ hashtag.
And before we get to the individual queries on the show, let's quickly take a look at the markets. We've touched fresh highs in today's session once again for Nifty as well as Sensex. Opening was in the red. We seem to have digested the higher inflation number, CPI inflation for the month of December. So currently, Nifty is at 12,340, and you are seeing broader markets actually outperforming. Sensex just about trading flat, though we've recovered from the lower levels as I highlighted. Pull up the mid-cap as well as the small-cap indices as well. There you go. Clear sign of outperformance seen there, and that's a good sign because in the last few days even the market breadth seemed to have improved. Let's pull up the market breadth on that note for the entire listed universe on NSE. The ratio is about 2:1, so good going there. And volatility too seems to be supporting the indices today because the India VIX has cooled off nearly 2% after surging for last 2 or 3 sessions. And in terms of Nifty contributors, which are the stocks which are contributing and which are the stocks which are capping the moves today on the upside? So your heavyweights like HDFC, ITC and TCS are trading with some bit of gains and contributing the most, while the gains are being capped by other set of heavyweights from the likes of Reliance Industries, Infosys, and also something like Kotak Mahindra Bank. In terms of sectoral gainers, you've got the metals and you've got the FMCG pack. Both these indices doing pretty well, and just want to highlight a couple of gainers then from the broader markets. And we've been talking about how Tata Global Beverages has been scaling newer highs. Long positions are coming in on the future side, and delivery data also looking pretty good for this one. The other one which is doing well is Andhra Sugar. Right from the word go in the morning, this one had a gap up opening and it has sustained the gains, and also something like Shriram Transport is surging in today's session. On the losing side, you've got counters like Motherson Sumi, where a downgrade came in from HSBC. They've downgraded the counter to hold. The stock's down about 2%, and today is the third straight session for Adani Green to be locked in lower circuit of about 5%. Remember, this has been an outperformer of 2019, and of course we'll be tracking earnings of IndusInd Bank, Wipro, as well as something like Mindtree. All these 3 stocks will be in focus ahead of their numbers today. Agam.
Okay, on that note, let's get in our experts for today. We have Vikas Jain, Senior Analyst at Reliance Securities, and Sameer Kadra, founder of Target Investing, who's joining us on the show. Good afternoon to both of you. Thanks for taking the time out. Well, let's very quickly get on to queries then. The first one is from Electronic Videos, and the question here is it a right time to enter stocks like HDFC Bank and Reliance Industries before their quarterly results? What should be the entry price? Sameer, I'll take this one up with you because it seems a little more fundamental. What's the view here? You've heard the question. Should you just move in right away or wait?
So I think HDFC Bank, you should avoid this year itself. I'm not too optimistic about it.
Yeah.
Reliance Industries can be, but I'll still avoid it because they have, for them, the major trigger this year is divestment. If that cash flow raising doesn't happen, then any kind of quarterly results really don't matter on a larger picture. So I think it's better to keep away and look for that roadmap rather than this execution on the quarterlies.
Okay, so that's the call coming in on these heavyweights. Before we start addressing any technical queries, Vikas, good afternoon. Just want to know if you have any technical bets right now.
Look at this setup continues to look pretty attractive on the overall markets, and selectively we are seeing some amount of outperformance from even the underdogs. So Bharat Electronics looks pretty promising. We have seen good amount of volume and price-based action over the past few days. So the stock has crossed its short-term averages. So Bharat Electronics can be bought at current levels for a target of 108, and one can keep a stop of around 94, 95. And HPCL is another stock which has bounced decently from its 52-week lows, and the stock is trending upwards. So we believe HPCL can be bought at current levels for a higher target of 285 with a stop of around 242.
Okay. We move on to another query from Rahul Tiwari. His question is on future supply chain solutions. He holds a very large number of stocks in this company, and well, he's bought it at 570. He has a long-term view here. So his question is, should I hold on to future supply chain solutions, or should I exit and switch to another stock? What's your view here, Samir?
So I think he can exit and switch it, because Future Group as a whole is constrained with a lot of debt.
Yeah.
And supply chain, again, logistics, the story of GST helping out logistics company really doesn't figure out well, and I think the numbers have gone off the radar for them.
Yep.
So I think it's better to stay away. You have a loss, but you have still a less loss than what the potential loss can be.
Right.
So it's better to go with a debt-free company, and if you're going for a long term, so it's better off even in worse times.
Okay.
Okay, that's the view on future supply chain. Let me take a query from Facebook. Ram Hegde writes to us. He's been holding 922 shares of L&T at a price of 1,330. He's suggesting he can hold on to this position till the month of February, and he wants to know what should be the ideal target price for this one. So currently it's at 1323 and his buy price is 1330. Vikas, what would your advice be to him if he wants to hold on to this position till the end of Feb?
Well, the stock has been trading in a particular band of averages of the short and the medium term, but he should continue to hold on. It's almost near to its price. There is a critical resistance level of those 1335, 1340. If that is being crossed, we could see the stock carrying up to 1395 to 1400. So we can continue to hold on, and the stock can see some movement of around 1395, 1400 levels by end of February.
Okay, moving on to another technical query that we have from Baby Doctor on YouTube. The question is on Info Edge. Well, the question here is that Info Edge has been bought at 2524. That's 2524. The question is, should I add or should I hold? What is the target and stop loss? It's currently at 2530. Vikas, coming back to you, what's the view on Info Edge and well, levels that the viewer should watch out for?
Well, the stock faced a lot of low volume activity, and we have not witnessed any major activity. And it has been pretty trending in this particular band of around those 2555, 2575 on the higher side and 2480 on the downside. So you can continue to hold on what has been holding on, but makes no sense to average, because this such low volume activity, the stock can see some amount of movement. The stop loss has been very far away from current levels, near to 2420 odd, and on the higher side, crossover of 2580, 2590, the upper band, you would see some amount of momentum of 2700.
Okay, that's Info Edge for you. Okay, let me, we've already taken one query of assembling videos. So if we have more time, I'll address your insurance space query as well. But Piyush Thakur writes to us, Samir, and he's saying he's entered into cement sector by adding 25,000 each of these stocks, JK Cement, JK Lakshmi, ACC, as well as Ultratech in the last week. He wants to know if he should look to add more, or should he invest in the same stocks or add new time horizon for the next 6 to 12 months?
So I think cement space becomes everyone's hot pick, at least
Suddenly.
the start of the year. And especially when the budget is around the
Yeah.
corner and there's this infra spend expectation happening. So I think JK Lakshmi out of the whole list which you've given me sounds better off on the balance sheet terms. Because cement industry, you always have to judge by balance sheet. That's where the EV EBITDA call really comes in. And I think out of the whole lot, Shree Cement and JK Lakshmi looks good. Ultratech is good enough, but they've taken a lot of capacity addition on that system. So that kind of capacity utilization also to run, you really need the volumes to pick up on the national end. That becomes very difficult for me. So I think Shree Cement and JK Lakshmi can be a better option.
Why not JK Cement? It's been giving good numbers. Exposure to white cement gives you better realization.
It gives a better situation, but again, the competition over there from Birla end becomes a little more tough, because Ultra Cement, when they take over all these kind of distribution channels, because when they're buying a lot of capacity, they will add on to a new white cement as well. So the new capacity comes into that place. So your pricing power also goes off. They are doing well, but again the valuations and the next 12 months we are talking about.
Right.
So I rather see next 12 months rather than previous 12 months working out.
Okay, well, another interesting question coming up on SBI Card's IPO. The question is from Ayush Gupta, and his question is, can a shareholder such as me apply in both the shareholder as well as retail category for lots in the SBI Card's IPO? Can he?
So he's a SBI shareholder.
Okay.
Yeah, he's a State Bank shareholder.
He can, but then again it depends more on SBI how they provide it out.
Okay.
It's not the way that HDFC works.
Right,
So it can be, it's on the discretion of the company who's listing it out. And if they give that discretion, then it can happen.
Okay, let me take the next query on Aurobindo Pharma, and this one's from Abhijit Kamaro. He's been holding the stock at levels of 630. He wants to know, will it be a right move for him to average this stock at current levels? And it currently trades way below his buy price at 475. Vikas, I'll come to you for this one. Do you think current levels are good enough if somebody wants to average into Aurobindo?
Yeah, he can do it, because what we have witnessed is that we have witnessed good amount of traction into the pharma space. And especially Aurobindo Pharma is seen as a breakout level in today's trade with plotting huge volumes. So the stock has crossed its short-term and medium-term averages, and we believe the stock can see further potential up move, at least to 525, 530 levels in a very short term. So we can add some at the current juncture.
Okay, because we have one more question for you. It's a relatively short-term query. It's actually a horizon of less than 1 year. So, the question comes from Nagraj Kinney, and the question is, between ICICI Bank and HDFC Limited, what would your recommendation be, keeping just 1 year in horizon?
Well, HDFC Limited looks pretty promising, because what we have witnessed is the stock always tests its lower band of the averages and gives a secular up move, whereas ICICI Bank is trading at all-time high levels. No doubt HDFC Limited is also trading at all-time levels, but HDFC looks pretty more promising because the risk-reward ratio would be more favorable in terms of HDFC Limited compared to ICICI. And the stock can have a potential to cross those 2850, 2900 levels over the next 1 year.
Okay, that's HDFC for you, and a heavy weight on the index. Sapna Samal writes to us, Samir, and she's purchased Aarti Industries at 863, currently stocks at 856. She wants to know if she can keep this position for long term, and specialty chemical space has been in focus.
So I think margins wise, results wise, and balance sheet wise, Aarti comes out better out of the whole lot, and their R&D spend is much better than others. So I think on a long term it is a good place, but if there are all these kind of, earlier there was this income tax rate, other news coming off, and if you find any dips, by dips I mean 10 to 15% kind of corrections, do a SIP. So you can add to your lump sum investment which you've done right now, and add a SIP over there. So next 3 years will be better off than what you've thought of.
Okay, we'll take a technical query on Spencer's Retail. We don't have too much data considering it's very recently been listed, but the question comes from Sagar Damani. He wants a short-term view on Spencer's Retail to know whether or not, it can go to 100 in the near term. That's the question. It is looking at quite a spurt today. It's up 14% today. But if you leave that aside, since its listing back in February of 2019, it really hasn't done too much. So over the last 12 months, if you actually remove the way things are panned out, not necessarily the most encouraging moves, notwithstanding the 14% up move today. But Vikas, what was your advice to Sagar Damani? Do you think there's a possibility that it could go to 100, or do you think that you'd want to wait for a few more cues before you can suggest such a level?
Well, 100 is a 2, because what is looking at almost more than 50% upside from current levels. And the stock has been seen a continuous fall. No doubt over the past few days, the stock has seen some amount of consolidation and seen a large up move in today's trade, as the mid caps and small caps continues to remain in focus. But makes no sense that he could add at current levels. He would wait for some amount of decline. On the higher side, the stock has the potential to test 81, 82 levels over the next 3 to 4 months. But 100 would be a tough target over the next time frame.
Okay, the stock's up 14% in today's session, and the volumes are pretty decent there as well. Okay, Mayank Saraf, who's a big fan of holding companies, and we've asked you this question in the past as well. So I think he looks at holding companies which trade at a discount of maybe 70 to 80%. Maybe he would have made some bit of money in these investments, but he's highlighted few of them, so I'll name them. If you like any holding company, you can advise him. So he's highlighted something like Stel Holdings, which is locked in upper circuit today with gains of 20%, Uniforce Enterprise and Maharashtra Scooters, and various other, holding companies which are listed. Is there anything which stands out according to you, and one should look at it closely?
So I think holding companies look good on that terms, that 70 to 80% discount being traded, but I'm not a fan of that. I rather buy the business which I am. So Maharashtra Scooters will lead to Bajaj Finserv being the main holding company over there. So I think I rather play directly Bajaj Finserv because again, for me, it depends on how my holding is doing as compared to what holding company is doing.
Right.
That can be a tactical bet of gaining a 20 to 30% kind of a upside, because generally the discount is 40 to 50%. So whenever it goes 70 to 80, everyone thinks that you have a 20% to be made. But on a long-term basis, I think it's better to buy the businesses rather than buying the holding companies. Because again, if Bajaj Finserv runs 100%, then only a 50% expectation as a valuation, as an expectation can only come through Maharashtra Scooters. So that really doesn't make a sense in, let's say, apple to oranges kind of a comparison.
All right. Well, there's one more question for you, Samir. It's on a public sector bank, Indian Bank. Ankur Bhanot has bought 500 shares at 210 rupees per share. He wants to wait for 1 to 2 years. What's the fundamental view? Should he average at current market price, which is currently at 99? His entry price is at 210.
So I think exit it out. There's a big risk that when you're running a bigger fiscal deficit, the next year you'll not be able to provide the capital these PSU banks need.
Right.
Now, if that risk comes into the system, then PSU banks' valuations will go at least 20 to 30% even further from here. So, and you're closer to the budget. So you're closer to the announcement officially, let's say, on one side or the other. And it's better to get out of these PSU banks at this point, because I don't see your NPA cycle reversing anytime soon. It might further deteriorate because retail and SMEs are becoming a big risk now to the system. So I think a better is SIP in the Axis Bank right now. I'm not saying a lump sum investment, but Axis Bank SIP or a IDFC first SIP will be better off as compared to holding up Indian Bank.
Okay, that's the view on certain banks. And keep an eye on Bandhan Bank. As you can see on your screen, I think the numbers are coming by. This is just the initial figure from Bloomberg Terminal, where Q3 income is coming at 731 crore versus Bloomberg estimate of 805 crore. Remember, the stock was up and about yesterday. It went strong into its earnings today. But after that, just one figure that we've got, the stock has seen some bit of correction. It's down about 1.3%. We'll get you more details with regard to the earnings, how the asset quality has panned out for the bank for the quarter gone by. But for the time being, the stock's down about 1.3%. Okay, let me take a query on Cipla then. One of our viewer on Facebook writes to us, and that's Siddhant Sharma. He's been holding the stock at 455, and he's pretty much in the money as the stock's now trading at levels of 483, 84. Vikas, would you advise him to book profits, or do you expect higher levels from here?
I think we can continue to hold on because we have seen some amount of leg up move, and as discussed, the pharma space continues to look attractive, and Cipla has seen good amount of volume breakout in today's trade, and has the potential to touch the 200-day average on the higher side near to 505, 510. So you can book profits anywhere between 500 to 510 levels.
Okay, we have a bunch of viewers with the same question that's on life insurance companies. We had the December APE, which was not bad at all. And the recurring question here, Samir, is the three large life insurance companies and what you find is the best bet right now.
So for me, HDFC Life works. Better channel distribution, lower cost of acquisition, more stickiness in products and the clients and the insurers. So it's let's say repeat business is higher for them, and more additional business from the same customer is better off. So all these parameters are long-term parameters, and I think HDFC comes out way much better than ICICI or SBI.
Or SBI Life. Okay. All right.
Okay, that's the insurance space, and just focusing back into Bandhan Bank's numbers, we've got the asset quality here. I think for the current quarter, you've got gross NPAs coming in at 1.93% versus 1.76%, which was there in the September quarter. So there is a deterioration that you can see in the asset quality, and similar is the case for the net NPAs coming in at about 0.81% versus 0.56%, which was there in the previous quarter. And for the quarter gone by, the provisions figure is somewhere about 294 crores versus 145 crore, which was there in the September quarter. I'm looking at the numbers sequentially because usually something like provisions and asset quality should be compared on sequential basis. Any initial thoughts, Samir, on the numbers?
So I think Navneet, yesterday closing show we were discussing the same, and I was again concerned about their asset quality. Now they've provided almost double previous quarter, and the asset quality on GNPA and net NPA has also increased. So I will stay away, and if I have any position, especially long term, I'll exit it out, because GRU integration has to happen, and I think this asset quality will deteriorate in Q4 as well.
Yeah, and the stock's clearly reacting to the numbers because it's fallen off the cliff, so to speak. From 515, it's currently at 502. And almost ready to break 500. It did move below that mark, and it's seeing a slight bit of recovery, but that's not that much. It's down 2% for now. We'll continue to keep coming back to the earnings, but for now, let's move on and talk about another short-term view on National Fertilizers, or NFL. That's the question, Vikas. That's for you. How do you assess National Fertilizers at 28 rupees per share?
Well, the stock has seen some amount of buzz up in the past few days, but it's better to avoid because you have multiple resistances on the higher side in the region of 30 to 31, which is the long-term average.
Okay, that's a National Fertilizer for you. Let me look at some more queries. Baljinder Singh writes to us, Samir, he wants a long-term fundamental view on something like Birla Corp.
No. So I think for me, the Birla Group as an execution becomes a very high risk kind of a execution system, and especially even if you see the CK Birla Group and others, they are having a lot of issues. So Birla Corp as a company, balance sheet is quite leveraged. P&L is not performing as well. So I think have a look at quarterlies. If you see any fundamental move or change, then only start to invest. Otherwise, stay away from it.
Okay, and moving on, Vikas, a question on Mahindra and Mahindra. We have Mri Nadu, who wants levels to watch out for towards the long or the short side. Perhaps if you could offer us support and resistance levels on M&M.
Well, the stock has seen a good steady up move over the past few days. It has crossed its short-term averages, and on the higher side now 580, 585 could be the potential targets. So the stock has good support in the region of around 540 to 539, and on the higher side 585 could be the potential resistance.
So I'm coming back to you on Equitas Holdings. What's the technical view on that one?
The stock looks pretty upbeat because we are seeing good amount of fitness into the small cap basket, and the stock has been holding firm. On the higher side, the stock has the potential to cross 110 to 111 over the next few days.
Okay, an interesting question coming from Mihir Joshi. Affle or Axelia? That's a fundamental question. So that's, Samir, that's one is for you. I'm not sure if they're in the same business, but well, in the internet, I reckon.
So I think Affle any day. I'll pick up Affle, but I'll keep a SIP into it.
Okay.
Because again, the valuations are a bit high. The free float is very minuscule.
Right.
And there are a lot of institutions who are hungry for that free float even further. So that's why the valuation sustain on that kind of levels. But there's a risk to the system because fundamentally the numbers are slowly growing, but the valuations are growing much faster than the fundamentals.
Right.
So it's better to stay in the SIP, so any kind of dip you are able to capture out.
Okay.
Samir, I'm coming back to you on something like Everest Industries and Visakha Industries. Now, both of them are into asbestos cement sheets. Vishal wants to know which is a better bet if one wants to invest for next 2 years.
So I think balance sheet wise, both are not that great. As Everest is a better off player in the system. But there's this company called NCL Industries as well. So over there also the balance sheet is much better than Everest and the execution is on the lower side as of now. But I think Everest you can pick, but I will stay away from these kind of mid caps till the time the budget doesn't give a clarity on what kind of a stance the government is going to take for next 12 months or 15 months.
Okay, let's also take a fundamental view on, technical view on HDFC Bank. We have a question from Arun Kumar Yadav. Vikas, what's your view here?
The stock has been trading pretty flat and it has good support near to those 1255, 1260 levels. So unless until the stock holds those 1250 level support, the view continues to remain positive. And on the higher side, if it sails its recent high, we can move up to 1330, 1340.
Okay, that's HDFC Bank. Samir, I don't know what you like more, jewelry, watches, shades or footwear. One of our viewers wants to know which is a better consumption bet, Titan or Bata.
So I think right now both are highly valued, overvalued, let's say in certain sense. I will prefer Bata because they have a store expansion plan and the cash flows are still much better than Titan. And jewelry for me is coming off the peak on the volume growth as well. So Bata can be a SIP mode kind of play right now, but I will still stay away for a 10 to 15% kind of fall to come.
Okay, from there on, we take a query on Vedanta futures. Manikant wants a view on the Vedanta futures. Vikas, probably the January futures specifically, currently at 164. What's the view?
Continue to hold on because the stock has crossed conventionally its long-term average and witnessing good amount of price and volume-based expansion. So we can keep a stop of around 160 on the downside and for a higher target of 173 to 175.
Okay. Samir, a lot of market experts have been turning bullish on CDSL. The stock's also at 52-week high. Would you advise doing SIP into that for next 2-3 years?
Yeah, I think it was way much better at 200, 220 levels. But again, if you've still not started, it's better to stay in CDSL because it's a market share dominated company. And I think privates are more shifting towards digital end of shareholding as well. So I think CDSL will increase their earnings, but quarterly needs to be really watched over there because it's more of anticipation running into the system rather than going in for the actual fundamentals. So do a SIP and I think you'll be better off. And another place where I want to suggest is a rating agency if we can do the same way SIP in care rating.
Okay, Samir, a quick view on Exide Industries. This question is from Anu. What's the view here?
Autos, stay away, stay very away.
Right.
I'm saying because first 14 days of sale is here and we are 30% down month on month.
Right.
So it's not a good indication for me, from my side. So autos, you can stay away for this month.
Okay, and Exide is at days high right now, sitting with gains of 4%. Well, it's time to wrap the show. Would like to thank both our guests today, Samir as well as Vikas. Thanks for joining us and taking us through your views on individual stocks.
But remember, we're just a tweet, a post, or a call away, so keep your queries coming in, and we promise to address as many of those through our shows. For all the previous episodes, visit our YouTube channel or website, BloombergQuint.com. Thanks for watching, and stay tuned to BloombergQuint.